Our mentors for this session, Mr. Naveen Malik from HCL, will serve as our moderator. With almost 2 decades of multinational experience in running incubation services, corporate ventures, Mr. Malik has spearheaded strategic planning and been at the forefront of corporate accelerators and exploration services. We are delighted to host him today. Can I have a round of applause for him? Alongside, we have Mr. Amit Bahel, a partner at PwC. Mr. Bahel, with over a decade of experience in the field of taxation, structuring, JVs, and more. A member of the Institute of Chartered Accountants of India, Mr. Bahel is a well-renowned name in the world of acquisition and investment. We welcome you, sir.
Thank you.
We also have the privilege of hosting Mr. Bharat. Mr. Bharat Anand is the senior partner at Ketan & Company, ranked by both chambers Asia Pacific and the UK as a band #1 lawyer for mergers and acquisition work in Delhi. Recognized as a global leader by Who's Who Legal for mergers and acquisitions and governance issues. Mr. Anand is a man who dons numerous hats with excellence. Joining along we have Professor Pradeep Mehra, one of our distinguished faculty here at the university. He also held the position of CEO for 4 years with AIC SNU, a beloved part of School of Management and Entrepreneurship. Professor Mehra teaches courses of strategy, entrepreneurship, negotiation, and managerial accounting to undergraduate MBA and executive MBAs. Professor Mehra also has an illustrious 25 plus years of industry experience in various leadership positions. We request the audience to welcome the panel while they are taking up they're already there on the stage. Over to you, Naveen.
Sure. Thank you everyone. Good afternoon. And thanks for joining the post-lunch session. It's always difficult to keep people awake post this. It's a tough job. But anyways, we'll try a level best. It's an interesting session. Usually, before I come to introducing the panel, usually what we have seen is, it's a fantastic journey, the startup journey. So you have the entrepreneurs passionate, they're passionate to grow, they're passionate to make big in the business. But at times what happens is they tend to loosen things or miss the sight of few things on the legal side, on the taxation side. This is where they tend to get it a little difficult rather in the journey during the later stages. And we have seen a lot of examples. I mean, one of the most famous one has been Winklevoss twins example wherein Mark Zuckerberg really went ahead and made the money. How to handle this? The biggest challenge or biggest conundrum here is where to go. What are the typical things that startups should be worried about right from the day one? And how can they handle it? To really answer all these things and at least give you some color to this, you take back some few good things. We have a fantastic panel. To my left is Amit Bahel. He comes from PwC handling taxation. To his left is Mr. Anand. He's from Ketan & Company, taking care of the legal aspects. And finally, I have Mr. Pradeep. Mr. Pradeep Mehra, he's from the School of Entrepreneurship and Management at SNU. Thank you, sir. Thank you, gentlemen, joining us. Before we get into this, I'd like to actually start by understanding from you, Amit. Then we'll get to Bharat and then to Sir. Within your entire journey on the taxation side and dealing with startups, you would have come across many cases. Some startups would be doing great, some would be in really big dire straits, some in different situations. What have you felt? What have you seen through this? What are your words of wisdom if I have to really ask you for our startups or the startup community today that we have? Share some experiences within your practice, what you have seen, what they should be looking at.
Thank you. Am I audible? Yeah. Okay. No, that's fine. I think that's fine. It's it's a tough task to keep you interested after lunch session, but we'll do our best. And my problem is that I do taxation, which is not something you would associate with something nice. But my key point here would be, and the experience I would like to share is, having worked on the tax side, that tax is a cost. We all know that tax is a cost. But if you plan it well, there are ample opportunities to gain savings out of it. And that's something you as an entrepreneur one should not lose sight of. Most importantly, savings coming out of tax have to be planned. You cannot have a fait accompli that you do something and you get a saving, but you'll have to plan it well. And that's something, you should all aspire for. One and foremost thing, one looks at in startups is, and I have seen, people missing, is cash management. Now, cash is king these days. And if you do your, planning of taxation well, you can actually improve your cash flows. By doing simple things like, doing withholding tax certifications. We know that in India, TDS is a fact of life. But the fact of the matter is that TDS can also be very well planned. If you have your business operations and you're getting receipts and getting tax deducted there, and if you are in a loss situation, there would not be any tax liability, right? If you have a loss, there could not be a question of tax liability. But your client will deduct a TDS. Now, how do you manage this? It's a very simple solution. You just approach the tax authorities for a TDS determination certificate, which can be a very prescribed and legit way of, doing your cash management. So these are the things, one should be watchful of, aware of, and aspire to have. So that makes a difference in your businesses. And I've seen the businesses, startups. The question was that, what kind of experiences, the startups have done well. If they have been watchful on these small things, they have been able to, enjoy the savings out of it. The other is the cash tax value of losses. If your business is in losses, you believe that there is no value attached to it. But please realize that once the business turns into profits, these losses can be offsetted against those profits. So you have a cash tax saving there as well. Plan it well. Do have an awareness and eye about these things. And of course, then the bottom line is impacted. So even if though tax is a cost, you can have some savings coming out of it. Thank you.
Amit, planning seems to be the catchword. Failing to plan is planning to fail. Okay, interesting. Bharat, coming over to you. The interesting thing about your job and profession is that people like to hear you, but at the same time, they want to keep a distance as well from the legal aspects. But anyway, the entire business of startup has a lot of touch points on the legal side. Right? And understanding this aspects can really help them plan things which can go really in their, in the entire startup journey. It can really benefit them. Right? So what's been your experience dealing with startups or these kind of businesses, what they should be really be thinking about, worried about, they should be planning about?
Thank you. See, the question that you've raised has a number of elements to it, and I won't be able to do justice to all. But I would really divide the discussion into two items, two buckets. There are the operating challenges, and there are capital raising challenges, right? Why is everybody looking at a startup today and entrepreneurship today? Because you want to solve a unique problem, you want to be special, but ultimately you also want to play the valuation game and the exit game, right? It is ultimately at some level about wealth creation. Now, when you think about legal issues in the startup world, please be clear there are two separate buckets. There are operational issues. Let me give you a few examples, right? 3 of you are sitting in a university, you have a great idea, like the infamous Zuckerberg did. But, who's the first person to incorporate, do you incorporate the company properly? Do you transfer the intellectual property that you've created to that company so that it's in a vehicle which is jointly owned by the 3 founders in whatever ratio that they've agreed? If you want to raise capital, tomorrow somebody may ask you, look, does the university have an interest in the intellectual property that has been created because you've actually created using their incubator, and they may have a retained interest, right? So I'm just giving you operational examples. There are 3 friends who come together. We say all of us are going to be CEO 1, CEO 2, CEO 3. Very quickly you raise capital and they say, look, we want 1 CEO, we want 1 leader. Somebody else was a finance guy, somebody else was a marketing guy. You could very easily give up designations which then taint your organizational structure. So keep your organizational structure clean, keep your incorporation clean, transfer intellectual property properly so that you don't have to give justifications. You told your cousin, I will make you a partner in this business and give you shares. 10 years later, you are raising capital at $1 billion valuation and somebody says, look, here's an email. The cousin comes up and says, look, what happened to my shares? These are real life things that happen, right? These are operational issues. On the capital raising side, you are dealing with people and raising capital who make hundreds of bets, right? Early stage venture capital investing is a business. Your business is to be an entrepreneur, their business is to back people. For every one success story, there are 100 failures. So keep that in mind. What they're doing is an art and a science, and they're masters of that art and science. So what do you need? And you need to, and I can't get into these issues in, in one response. Hopefully we'll cover it in the rest of the panel. But keep that in mind, right? They've looked at hundreds of term sheets. At what valuation do you want to raise capital? What is the structure of the raise? What are the rights that you're giving? And in that capital raising, I would just say, remember two things. There are control rights and there is economics. There are economical rights. And venture capital is all about the right balance between the control package and the economic package. And these term sheets are highly engineered to deal with these two basic concepts. And then we can talk about how these concepts are delivered. But that's how I'd like to frame your thinking.
Thanks, Bharat. I think valuations, what you used, is the buzzword. Everyone is interested in that. But you raised certain very good aspects, and we'll come to them, as we discuss more. But moving over to Professor Pradeep. So you have been into, management, entrepreneurship for some time, but before that also you have been CEO for many, many years, right? And you have seen this space for a long enough time to really understand the nuances. What's your words of wisdom, or what's your suggestion to any budding entrepreneur or anyone planning to get into business or who's recently got into it? What would be, those certain points or aspects he needs to keep in mind? I would like to use... Sure. Go ahead.
Is it working? Yeah. Okay, fine. So since the topic is about striking the balance, okay, so I want to address you about some points that I would like all of you as a startups to keep in mind. Okay. So striking the balance actually comes from the fact that, we as a startup many times are focused on our business propositions. Okay. And some important issues like mentioned legal, regulatory, taxation and others, are out of focus. So are some other issues like human work culture, human recruitment of human resources. Many things, are not properly taken care. So I have thought about a few points which I want to talk here about striking the balance. Okay. So one is that, as just now Bharat mentioned, about incorporating the company, ensuring that the intellectual rights are with the company rather than with the individuals. But also remember, they see that is one side. Second side is that it is easier to start a company, form a company, private limited company, than to wind it up. And the statistics says that more than 90% of the companies actually will finally end up not being successful. So what happens in that winding up process is very tedious and very painful. And forming the company is a very pleasurable process, and winding up is a very painful process. Okay. So when should one therefore, the balancing comes from the fact that when should you start a private limited company? That is when you want to take some investors' money. Before that, unless there is a real need, one should try to delay as much as possible the formation of a private limited company. Of course, when you need to have investors' money, equity, etc., then there is no other way except to have a private limited company. But ensure the balance between the two. Okay. The other point is that the balance issue comes in you have an idea. Okay. I see it every time in the university. Okay. And many times people actually come to us, startups come to us, incubators come to us and say that, what should I do? Should I talk to should I talk to other people or not? What if the other person will steal my idea? Okay. So one has to take again a balance, whether one should talk or one should not talk. The default is we should not worry about talking. Okay. If anybody can steal your idea, then that means you are not able to execute it. Okay. If you can't execute it well and somebody else executes it well, that there's some problem in your situation. Okay. Of course, you have to be careful. You have to balance it out. But the default is don't worry about sharing the idea if you have to develop it further for successful journey. Another striking the balance issue comes, when you are preparing your product. Okay, and when you are preparing your product, making the product, and you want to perfect it. Okay, you want to ensure that when you hit the market, it is absolutely flawless, and it is taking more and more time. Versus the choice whether you should do it faster, even if it has some problems, even if it is not fully ready. So where the balance lies? Okay, the balance lies actually in going to the market as early as possible. Okay, you can fix up the bugs later on, you can fix up many things later on, but because when you hit the market first, you will find that you have made some errors. There is a very high chance that, initial response will be that you made mistakes. Okay, so you can correct it. So that this process of correction will happen. Okay, so don't worry about that. Another issue will come, which I saw today also among some of the team members, some of the presentations today. Okay, about the founders thing. No, we all the time see in the universities our engineers come, but they have no idea about business. Okay, engineering students. Similarly, our business students have hardly any idea about the engineering side. So what is the right thing? Right thing to have a team which takes care of both. If you have a starter team which is only of lawyers or only of accountants or only of engineers, okay, then obviously there will be some problem. You can't, especially technology, for example. If you outsource technology and suppose things go wrong, then there will be a problem. So you need to have a founder. So one has to decide, therefore, should I have a founders team which is what we our friends, or should we have a founders team which complements each other? So there, once again, you have to find a balance, and the default is that it should be a team which should complement with each other. Especially what happens is, suppose you are technology, for example, if you outsource, you are chartered accountants and you outsource the technology, and then that outsourced vendor defaults, then what? Then you have a problem. So you need to have a CTO in-house who cannot leave you, okay, who is not your employee, who is a co-founder, who has the equity holding. So he can't leave. So he is the one who will take care of the technology part, because unless otherwise things can go wrong. Another point will come, which is not easy to come actually, is about the work culture. See, when you start your startup, okay, you are all the time worried about how to make it successful, etc. And suppose two of you are there, then you will keep working whatever times, etc. You may have compromises. You don't realize that if God willing the company becomes successful, then you are already seeding the culture aspects in the company itself. So the way you treat mistakes, the way you deliver on time or not on time, the way you think customers should be handled, all these things, when the new people join, new employees will join, they will follow you. And slowly, this will become your culture. So we have to realize that we have to strike a balance between what immediately appears to be important, but which will also be important later on in the context of right ethics, right values, and right principles. So we have lawyers and accountants here. So, and you realize that laws are not only corporate laws or taxation laws. You will have to deal with labor laws, provident fund, ESI, and so many other laws. Okay, and if you are in a business which has food, for example, so then there will be food packaging means packaging. So many laws are there. It is very difficult for you to properly know that. So what is the answer? Answer is to employ someone. Okay, Pricewaterhouse or Khaitan & Company may be very expensive. Okay, but employ someone who can actually help you. Okay, who is knowledgeable, professional enough. Okay, the problem happens is affordability. So all the time, you think that, this is a website says they will form the company and they will give the service, they will do it in 10,000 rupees, that kind of thing. I don't have much money, so what should I do? So this issue of affordability versus, whether you should have some professional person or not will always come. And you have to decide a balance between the two. Okay, so where the balance lies? The balance lies actually to open up your pocket a little bit more, okay, and employ some professional. It will actually pay you up much better. It is much better to do that. Okay, find some expense budget for a better professional accountant and lawyer to help, company secretary to help you in this. Okay. Other issue which will come, thankfully, if you are getting on the way of success, the issue will come on fundraising. Okay, and if you are getting people who are interested in invest in you, and you think that should I invest at this time or should I invest later? Okay, or should I get my investment later? Because there's always a balance you have to create in between, in the sense that if you do now, perhaps valuations will be less. If you do it later, perhaps valuations will be more. So you think that let me do it later. Okay. So the problem that happens there is that, two things one has to keep in mind. One is that liquidity is of utmost importance for any startup. Okay. The chance of becoming bankrupt, okay, can be a killer to the best of the idea. So you have to ensure that you have funds all the time. Secondly, most of the time startups underestimate the time that it takes to get funds. Okay. It takes several months for an investor to get interested in you. Okay. That if you start a journey now, you will be lucky if in 3 months' time you are able to get an investor to give you a term sheet. And term sheet does not mean you got money. After term sheet, from the time the term sheet is signed and from the time that money comes to your bank account, it can be another 3 months. So that means 3 plus 3, 6 months if you are lucky. Okay. So that means you have to ensure that you have to keep that much lead time with you to ensure that you don't become bankrupt suddenly. Okay. So once again, balancing is required between whether I should start the process now or whether I should start it later. Now, term sheet, as Bharat rightly mentioned, is a fairly complicated thing. Now, in our university, as some of you who are already MBA students know that, BMS students know that, we teach extensively entrepreneurship as subjects. We teach design thinking, we teach starting, managing new ventures, creating new ventures, business negotiations. In our business negotiations, we have a role play. So one person is a venture capitalist, VC. The other person is an entrepreneur. And then they have to negotiate the terms of the term sheet. Okay. And very technically oriented. So of course that's an educational institution we are in, so we are able to explain. But if on your own you want to do it, it will take long time. So what is to be done? You have to have some lawyer who is conversant with the terms of term sheet and who knows what actually is written for the sake of writing and what is written actually which can be troublesome in future date. Okay, many things are there, tag along rights, control, board seat, many things are there. So some of the things you may not even realize the implications at this moment of time. So better to take an help at that moment of time. Other issue always comes is valuation. Now what is valuation? Okay, valuation is a very, very fuzzy concept. Okay, very fuzzy concept in the sense that, on paper, one can say that, we are doing discounted cash flow, we are making a cash flow statement, and then on the basis of that, some valuations are being done, considering the risk factor, etc. That's all maths. Unfortunately, life is not like that. Okay, valuation finally, to a large extent, actually boils down to how much money you need to go to the next stage, and how much percentage ownership that the angel fund or VC fund is looking to take in that. So that finally works back the valuation on that basis. Okay, and then maths can always be worked back all the time. So you have to therefore know that how much money you are asking and how much percentage you are ceding. These are the two critical aspects to keep in mind. Okay, and VCs, for example, will not, of course, everybody wants a high value, higher share. But they also know, the investors also know that, if they take away all the share and the future dilutions, it should not happen that, finally you are left with 2 or 3%. So good luck, if your company succeeds. But you are finally left with 2-3%, then you lose interest. So investors want you to have interest. So it's a balance once again on that side as well. So these are some of the things that I thought I'll just share with you for the purpose of striking the balance.
Thank you, Professor Pradeep, sharing the gems from your life. It's always said there are two things a person cannot avoid. One is Mr. Yamraj and second one is Mr. Taxman. Right. So Amit, coming to you on the tax piece. If as a startup today, I'm into it or I have to get into it, what are 2-3 crisp things to really save the tax or really at least postpone it? If you can't avoid it, at least for a few years, I can push it off so that I get that comfort. Once I'm in the cushion seat, I can pay it off. So what are those 2-3 crisp things that today we can take from a tax perspective, saving it?
Okay, I think that's a great question, and I'll answer it in 2 buckets. One is for the founders. I think since we have a lot of entrepreneurs here and founders here, one of the key things is that in this life cycle, you will have a lot of fundraising, happening at various points of time, and the founders will be compensated in the form of incentive plans, which could be, in the form of ESOPs. Now, ESOPs have a very peculiar taxation, where even in a cashless format, you are taxed at a very high bracket because ESOPs are considered as salary, and salary taxation at an, HNI or the highest bracket could go from 36 to 43%. So that's a significant amount of tax, which comes across. Now, how can you plan for it? Of course, you can plan for it. There is an opportunity. You should look at incentive plans which are different, where you can actually do a share purchase rather than a stock option. And there the taxation incidence would be completely different. But we can always have the features of stock options coming into a share purchase option also. So things like this are something, which the founders should be aware of, that there are opportunities, where you can in a very legitimate fashion do tax planning around your incentive plans. I think that's one for the founders part. The second on the business, as I said, one very key element which, I've already stated is, doing a better cash management with your TDS. While TDS, as you said, it's a tax cost and a certainty, but definitely there is a certain way of reducing this, TDS liability also if your business is not into profits. So these are the 2 very critical things, one should watch out for. As I've previously also said, these have a direct impact on your, bottom line and valuations. And as Professor Saab said, you need time to survive from one fundraising to another fundraising. And these are the very small steps, which you could take to take care of that.
Sure. I think we're running out of it, so I'll make it quick. So Bharat, coming over to you. Now, on the legal side of things, there are a lot of queries. I was talking to people before the session. One of the most important aspects is fundraising for the startup. Right? So everyone is really in a confusion state or really wants to know what are the aspects on the legal side they should be considering when they're raising the funds.
Thanks. I'll make it brief, but I'll try and give you some points that you can take away. So while the objective might be to, quote Professor Mehra, striking a balance, the fact is in the market, it's a winner takes all, right? Human greed and the fact that if there is value, I want a greater pie of the value. That is the mindset that drives behavior. So ultimately, you need people who can guard against that behavior. So let me just give you a couple of examples, right? Say you want to raise at $10 million, okay? The VC comes and says, no, sorry, I'm going to give you a deal at $8 million. But what he also might tell you is that, look, we all come in. What happens is that the share capital is divided into 2 types of capital, right? Common stock, which is straight equity, which the founders own, and preferred capital, right? Preference shares. And essentially those rank senior. But because they are preference shares, they convert into equity. And the manner in which they convert is related to your future performance. So they could turn around and tell you that, look, we are taking 10% of the company at a valuation of $8 million, but it's a convertible instrument. This is on an assumption that if your next round, because you've also given them some projections, right? That this is your next round will happen in 2 years' time. It will be a qualified financing. We call it a qualified financing. Your qualified financing must take place at a valuation of, based on your projections, $30 million. So if it doesn't take place, then rather than taking 10% of your company, I'll get 15% of your company or 20% of your company, right? Second concept that we often see is a conversion discount, which is that even if the next round is taking place at that $30 million valuation, my shares will convert at a discount to the 30 million. So my shares will convert at 20 million. Now you might ask why? Why should a founder agree to that? But the answer to that is that the VC says, look, I'm coming in early. I'm coming in where your proof of concept is not yet established. The revenue curve is not yet established. And for this risk, I want a discount. And the third thing which he may say is a valuation cap. So maybe you can raise your next round at $100 million. First round is at $8 million, next round is at $100 million. As far as this VC coming in is concerned, he's saying for my conversion, for this particular series of fundraise, my cap is at $20 million. So it doesn't matter what you raise your next round at. You could be the next Facebook, you could be the next, you could solve Corona, whatever it is. As far as I'm concerned, my valuation is capped. Therefore, I will get a larger percentage of the pie. So I think, people who are raising capital for the first time just need to understand that this is a highly jargonistic industry. You're dealing with people who are experts who do this day in, day out. So, speak to some folks who've done it before, speak to your peers in university who've raised capital or are working at startups and understand how these jargons work. Good luck with all the capital raising plans.
It seems be always in touch with experts. Professor Pradeep, I'll take your permission and just open it for Q&A. So we have some time, 5-7 minutes for quick Q&A. Anyone from the audience? Any questions? Sir, please go ahead.
So see, as a part of Startup India, government is actually giving a lot of incentives about taxes, etc., right? And I believe that there is a tax holiday for a few years out of the first 7-10 years. But is that money actually, let's say, is that money to be returned to the government at a later stage, or?
So that is a profit-linked exemption, and it's a complete exemption, so it is not to be given back to the government. It's only you have to fulfill the conditions to claim it, but once claim it, those profits will not be subject to tax at all. So complete tax holiday is what we call. Yeah, it's a tax holiday.
So you have to give it in the next year or?
No. There is no, in a simple example, you have earned 100 rupees of profit, completely tax exempt, no tax on that. Next year you earn 120, no tax on that. The third year you earn 80 or 140, no tax on that. After that, only your tax meter will start on the newer profits made after these 3 years.
You can claim it in any slot of 3 years?
No, this is important. The law says 3 consecutive years.
Any 3 consecutive years?
Yeah, so you have to claim it in 3 consecutive years. It's a complete tax holiday of your profits. No tax to be paid for those 3 years. That's it. The only thing is, the government has given these benefits, but there could have been done more. Like, in a case of startup, they have said 3 consecutive years. Now, this could have been okay for a manufacturing industry because once it turns around, it will have a clear-cut path to profitability. But startups can also have, can have different vagaries. But the issue is you'll have to choose your 3 consecutive years out of the block of 10 years. And the first time you'll hit profit, probably you'll start those 3 years. And you will not get an opportunity to, think in hindsight, which were the better 3 years to go for it. 10 years. So you have to choose 3 years out of the 10 years for these profit-linked holiday, but a complete tax holiday. I think government needs to be complimented for this. You don't have to give it back.
There you have.
Hi, sir. That was an amazing panel. But my question is regarding especially that startups which are into environment and cleanness. What are the tax benefits they are getting from the government, especially when they are doing water and environment things? And for legal, sir, I have a question regarding that. What about the startups which are in a very gray area of the industry, which are not clear by the law? How they should go regarding that? They should hire a lawyer, or they should do their own research and do better work?
Okay, on the tax incentives, you said environment, right? Did I hear that well? Environment. Okay, so while we have separate tax holidays for infrastructure-related project, I'm not getting into that because those will have very different conditions. I don't think so our startup fraternity would ever reach those things. Coming back to this, there is only then one tax holiday, which I just explained. There's a 3-year tax holiday of your profitability, 3 consecutive years. That's about it on the profit side. The other tax benefit, what we call the government has given is, on the losses side, that in India we have a concept that the losses of a company lapse if you change the shareholding of the company by more than 49%. Now for startups, some of the benefits have been given that those lapse of losses provisions will not apply. What we call the lapsing of losses, those will not apply. But apart from that, I'm not pretty much an indirect tax guy. If there are any GST benefits, I'll have to come back to you. But from a corporate tax side, these are the 2 only things you can aspire for.
Yeah, could you just repeat that question? I didn't quite catch the legal limb.
Yeah, so for legal one was that regarding the grayscale company, we have heard the terms again and again, grayscale, which means the company will not show in law whether you're operating in legal or illegal way. So what about them companies like gambling and other industries which are coming?
Yeah,
and
so if I've understood your question correctly, just paraphrase it, where the business model is not very clear as to whether it's absolutely black and white, it could be a little gray, right?
Yes, sir.
Yeah, so innovation is always in, different shades of gray, yeah. As far as I'm concerned, 50 shades of gray, doesn't matter. You should be clear about 2 different limbs, right? Get an expert for your capital raising. It's going to really impact you on value. On your operating laws, etc., go with somebody you're comfortable with, right? If there is an issue, see, one thing is certain in the life of a startup, that you cannot predict the future, right? Whatever plan you have, whatever valuation you have, whatever revenue model you have, that will change. So your business will also change, it doesn't matter. You just have to make sure you raise capital from the right people who are willing to support you, and you understand how you are being impacted by their term sheet. I think the most important is the Series A term sheet, because that sets the tone for future financing and will impact you in a big way.
Does that answer your question? Yeah. So, I think we just, over the time, just one last question since you have done so quickly.
Okay. When the startup receive an investment as either a CEO or PE, is there any taxation which need to be paid on that?
Sorry, could you repeat the question?
When a startup receive an investment, that
okay. Okay, I should have covered that. So this is what we call an angel tax, and a lot of fury is created here. You'll have to understand the background, and I'll have to take 2 minutes. There is a law in India, and most of the tax laws in India are because of the bad practices and abuses which have been done in the past. So now there is one law which says that if a company were to receive capital, that company would need to pay tax on it if it's receiving that capital in excess of its fair value. Now, very strange tax. Nowhere else in the globe you have this tax, that when a company receives money, it could end up paying income tax on that, but we have a law in that, and we have to blame some people who used and abused this law in the past. So now we have an anti-abuse law. The problem is that in startups, we don't have very good definable norms of how the fair valuations have been computed. So that's the law, which is a problem area. This is called angel tax in your startup community. The government has given, the tax government has given an exemption on this to eligible startups, that they will not be subjected to this angel tax, meaning thereby you can actually receive money at more than your fair value also and not pay tax to the government. You have to fulfill the conditions, but that can be addressed. My only problem now that, there is an exemption available for startups, provided you fulfill the conditions and your fundraise is below X amount, it's 25 crores of share capital and share premium. So that's the maximum threshold. This is my issue with the government. The thresholds are archaic. In this current environment, we are talking of 25 crore of share capital and share premium. It is too low. So that's something which, you know, the government needs to be alive to, be sensitive to, and increase those limits. But at least we have an exemption on that for startups, not there for the rest of the community. For the rest of the community, they will pay tax if they get money more than the fair value. Thank you. The company. That's where I'm saying the recipient company. This is one-off tax. You'll have to believe it. This is one-off tax. Nobody in the globe has ever seen this tax, and I'm questioned by my foreign, you know, clients and peers. How can you have a tax like this when a company receives capital? It is a capital account transaction, but the company pays tax. The company will pay tax, but for startups, we have an exemption. The only catch, the exemption is subject to conditions, you know, which should be.
We are running out of time. Thank you.
Much better, you know, if we are able to give you some takeaways and, you know, some taking points. So we are here around and, you know, we can surely answer the questions here.
This is an expert advice without cost, so don't leave it. Okay. Thank you everyone. Thank you so much.
Thank you. Thank you, Naveen, Bharat, Professor Mehra, and Amit. This was a great insights and knowledge what they gave, and I think we are sure it was greatly impacted the way startups will approach the legal and taxations from now on. What we have lined up is an absolute delight for those who learn from examples and stories of others who have traveled the same path. Empowering Innovators is a session curated around corporate innovation, where we call upon industry experts who will elaborate on their journey, who they started, and how far have they come on. An enlightening panel will discuss the corporate world and the startups down that ensue thereon. First, we have Mr. Murali Talasila, an innovator armed with cyber risk and emerging technology expertise. Mr. Talasila has elucidated incredible lessons on the country's startup environment. An industry expert in engaging with startups and ecosystem, Mr. Talasila focuses on disruptive business models. Alongside, we have Mr. Naveen Malik from HCL with almost 2 decades of multinational experience in running incubation services, corporate ventures. Alongside, we have Mr. Saurabh Gupta, Associate Director at Deloitte Innovations, a startup evangelist. Mr. Gupta is at forefront of the Deloitte Catalyst Startup Program, having immense knowledge about digital solutions and operational excellence. Lastly, but not the least, joining these 3 pioneers will be our very own Dr. Bikramjit Rishi, an integral faculty of the university with over 30 research papers and 2 books. Dr. Rishi is an inspiration in the industry as well as the academic circle. We request the audience to welcome our speakers and begin the segment. Would you like to have this?
Sure. Good afternoon and welcome to this session. So, change is very much visible to all of us. A topic which was the conversation or the discussion for certain communities at one point in time in India is now being discussed in the government circles, in the universities, in the business schools, and even in the corporates. That is why we are here. So, corporates which was focusing on once upon a time with their businesses is now looking upon ideas which they can fund. So I have in this panel the 3 experts coming from 3 different companies, SCL, PricewaterhouseCoopers, and Deloitte. So they will be deliberating upon what the companies are doing, what is there for us to learn upon, and how the startup culture can take a better shape in India. So first and foremost, I will invite everyone, each of you, to talk about what your company is doing in this area, and then we will deliberate further. So 5 minutes for each of you to for that.
Sure. Thanks, Thank you. Thanks. So, coming from HCL, of course, since the parent is same here, you'll be knowing a lot in terms of how we have grown. But I like to say this: HCL is not just about heritage as part of innovation, but it's also in the DNA. It's also in the passion what we have done. So, if you see the history, right from 1976, when things started growing or things were established, HCL typically, or rather at the same time when Apple came in with its first computer, during the same time we also launched the first PC, right? The 16-bit processor we launched. Then we went on to create the first RDBMS in India, the network operating system. So what I'm trying to say is the innovation has been the culture. It's been in the DNA of this company. That's been there for decades now. At the same time, what has happened is, besides innovation, the entire concept of creating an ecosystem around it has gained a lot, right? So while we kept doing innovation, we also kept taking people along us. It's not that we are doing innovation just within the company. It's an ecosystem that we are bringing together and taking the innovation. So what happened was, of course, there's been a lot of change in the environment over the years. Coming from a technology company, I would say the scope of innovation increases, right? Or at least the change, since it's very fast, the capacity or the opportunity to innovate is more. And this all began, not really began, but took really big pace when IoT came in, when cloud came in, right? And the digitalization of things started happening around 2010, between 2007 and 2010. That's when new things started happening. Cloud started giving wings to solutions around IoT, around digital, around those kind of things, right? And that is where we also expanded our wings. While we were working with a lot of partners at that time, working internally on innovation, we started expanding our scope of innovation. That's where we started reaching out to startups, the VC community, the PE community, right? To understand what do they have in their portfolio and how we can collaborate, right? And this was a time frame that, of course, it was happening between 2012 to 2014, but in a bigger way, in a more formal way, with more departments and functions rolling into it, started around 2015. That's where you can really say we formed our corporate entrepreneurship function, okay? And this was a function where we really wanted to go out to the community and start seeing what all technologies are there. And it was not about just taking technologies from outside, it was how we can partner with them, right? So what happens in a partnership? In a partnership, we tend to grow together, right? We just don't create wealth for ourselves. It's a community, it's an ecosystem wealth that we create by delivering value to our clients. So that's how we reached out to startups, we reached out to larger VC community and see how we can grow together. And there's always been a sustainability element to this. While we provide solution to our clients, while we provide, solve their problems, we have always looked how we can solve it in a more efficient way, in a more better way, in a more everlasting way. And that's why now we have a formal function, we call it ETO, okay? And this is interesting, I'll just come to it. But through this function, we tend to, keep on proactively and reactively reach out to all this new innovative companies and see how we can partner with them, bring them into HCL folds. And we tend to, make arrangements with them in terms of investments, M&As, strategic partnerships. But another interesting thing within HCL, I think it's in the DNA. It's not just one function that does this. Maybe in a more formally way or in a more, the way we portray to client, it might be that way. But every person in HCL, every department in HCL is called, every person is called an ideapreneur. And it's called for a reason, that he's free to create something new. And we provide tools and solutions for it. We have internal value portals, competitions. And the competitions are dedicated for innovation, yearly competitions. So it's a kind of building a habit of innovation, a culture of innovation that keeps on going and taking you along. That's what we have tried to build it. So it's not just one function or my duty to do it. We try to building this, inculcating this habit within every HCL. That's how we do it.
Thanks, Naveen. I did not want it to go to the 150 years history of PwC, so I'll keep it short, but he inspired me, so I'll give you a little twist. I always tell my colleague Amit, he's from our tax services, that boss, in 5 years, you guys may cease to exist. So, because that's how I keep my job as innovator, right? I need to keep scaring people, ye aa jayega, ML aa jayega, kha jayega tumko. I need to keep them scared and engaged all the time. But jokes apart, if you look at most of the audit, accounting, and now consulting firms, 150, 200 years old, they have evolved successfully for larger part because the rate of change always gave enough breathing space. Example, simple example, when ERP came, it took 10 years for SAP to become so big. So, and lots of modules in SAP are finance-centric or accounting-centric, so there is a relationship for you. Now, cut the movie there and move it here, blockchain, there is no relationship with your life, nothing to do with whatever you studied, done in your past 10 generations. So you're disconnected from the present altogether and you're being asked to innovate. So the world is at a very different tangent at this moment. So that's why there is a very clear role and mandate given where the thought process and the ecosystem part which Naveen was referring to, and always quote this, I stole from Guy Kawasaki, let 1,000 flowers bloom, which he actually stole from Mao. That's how it is. It's about creation of a valley which is fertile with ideas which are based on problems. And don't be surprised if somebody gets inspired by you and builds something better than yours. And that is the ethos of what we are trying to do. And so far, we've been fairly successful.
Thank you, Murli. And coming from Deloitte, I can really resonate with whatever you have articulated, because a lot of this work is also that we are trying to implement for our clients, for our firm at large, which is basically to say, and I think I'll take a leaf out of what Naveen also said. For us, one of the key factors that we are pushing for within the firm is to say that can my everyday practitioner, right? We are 15,000 odd strong member team in India. So can I call every one of them a budding entrepreneur, or I can call them an innovator, right? So there are quite a lot of initiatives, there are quite a lot of work that is being done internally to make them aware of what innovation is all about, to make them open their minds when they're talking to their clients, when they're talking about their projects. They can keep that hat on themselves to say that, is there a better way to do it? Whatever I'm currently doing, is there a newer way to do it? And can that new way be measured and quantified, which can impact the business performance, right? So in a nutshell, what I'll say is innovation, in my mind, is both something new and that something that can be improved. So a totally different way or a totally new way of doing whatever you are traditionally been doing, it need not be an invention, right? So there is a clear distinction between an invention and an innovation, right? So I'm not talking about invention, but innovation is something doing something in a different manner, and that too in a way which can be an element to this. And I mean, I read it somewhere. Steve Jobs had once said that best artists ship. So that is something I'd really, personally, I'd take it to my heart, saying that in a scenario when you're looking to build your products, in a scenario where you're looking to come out with a new idea, right? You can, as we learned in the last session also, you can spend a lot of time trying to come up with what the end goal might be, what your vision might be, right? But if you can take that time out, if you can structure your thought process in such a manner that you can really put your product out, put your thought process out in the market for it to start generating reviews, yes, you'll fail. We have heard it, you have read it, everybody knows 95% of the ideas will fail. But that is the whole crux of things. You should learn to fail, because that is how you learn to grow. And that is something within Deloitte we are also trying to push through. We are also trying to achieve that. We come up with newer ideas. We see where such ideas are progressing. We take a timeline cut in terms of how much visibility, how much balance, or how much leeway we have in taking it to market. If it's not successful, we move on to the next idea. And that is both in terms of having our practitioners adopt that approach, and even for the kind of projects and even kind of the innovation that we are trying to bring in is something that we look at and hope to achieve.
Interesting. A new elephant in the room. Okay. So everybody will be curious to know that it is something different which is happening in the organizations. Ideas not only within but from outside also. So my next question to all of you is, what are the benefits of the corporate startup engagement? Because everybody will be curious to understand what I should look for, what benefits I can look for if I want to engage with the corporate.
If it's okay, I can, yeah, okay, thank you. So, as I was just articulating, right, you have to learn, excuse me, you have to learn to fail fast and continue to learn, right? And that is one of the biggest, I would say, achievements of working in with a corporate. You, while putting your product out, it's a game of trust between the corporate and a startup, right? The corporate is not aware of what kind of product you're bringing in. They might be aware of the overall technology, right? I know if it's an IoT-enabled startup or a product that can do XYZ things, it's an analytics solution that can do XYZ things. But how is that solution, how is the solution that you are bringing on board going to impact the performance of the corporate? That is something that is not really available or on the table right now, right? So it's a game of trust. They are hoping to understand from you how your solution is going to impact them, and the startup in itself is going to try and see if working in that kind of environment will their product, they can really help scale their product and move on to the next level, right? So basically what I'm trying to say is then you have to, from a startup perspective, refining your product idea, refining your thought process, refining your go-to-market strategies, these are some of the elements that they can definitely learn and work upon while working with any corporate.
I'll give you a live example. It's public, so I can speak the client name as well. You can check out Nomura's Voyager. Google, if you could. You can see the videos and the whole program and everything. So the problem statement is, look, we have these hundreds of problems. It takes too long to finish off these problem statements if we give it to a vendor. Is there a better way to solve them? That is the mandate we got. We turn the thing, traditionally, okay, you prepare RFP for every single one of them, call all my brethren, and India Inc., IT Inc., everybody will come, bid, we win, and we execute, and we move on after a year or two if you're lucky. That's the traditional way of delivering the projects. We said, no, we will solve these with the help of startups. We did call for applications across the globe. 1,500, 1,600 from Israel to UK, everybody applied. And for every problem statement, we adapted and pre-selected 10, 12 of them based on the quality of the tool or the technology available. Then the stakeholders were arranged to meet them. But the trick is, the stakeholders are not passive, but they're part of the project. I'm only being a moderator, so they own the project and they run the project. What are the typical problems you face? Culture. Typical PO takes 90 days in any FMCG or a large bank for you to get a PO. So even after the contract is signed, the PO will only come after 90 days. When you deliver your project, 90 days afterwards, if you're lucky, you'll get your money. In 9 months, probably a startup would have died or pivoted 3 times. So there is a different pace at which a startup runs, a different pace at which corporate runs. So the principles, both of them are right in their own way. Their worlds are different. And they're trying to find a confluence between them. And we are trying to be the bridge in between them. Okay, fast forward the whole movie. Out of the top 10 problem statements, 12 startups succeeded. And either they got a PO just to deliver after the prototype or a term sheet. Either one of them happened. So why do they have to do it? One, the way startups solve the problem is a different methodology altogether. The pace at which they do is neck-breaking. Third, last but not least, the employees who are extremely process-centric and risk-averse tend to learn to do agile stuff, fast-paced stuff. So you are actually learning a thing or two from the startups. So it is a win-win for both sides. And to have a Nomura logo on those startup website is a great achievement for them. So it would have brought the next round of funding in a jiffy to them. Over to you.
So in terms of benefits, I think both startups and enterprises, they have something to gain, provided they play the game, with rules, right? Of course, the confluence, as you mentioned, it's very difficult. See, from an enterprise perspective, this is for startups really. They need to know what is the enterprise looking at, right? Let's understand this. There's a customer, there's a client problem, right? And it comes to enterprises. Now, in reality, it can be either reactive or proactive, right? What does reactive mean? Reactive means there is a problem statement, there is some solution that needs to be delivered. And for that, the enterprises or the large companies are getting, in touch with startups. So that's one need. If that need is there, it's a reactive, you can call it, things move pretty fast. In a proactive manner, it's a little different. It's kind of, there's a, typical innovation team or someone who's looking at startups or looking at new trends, and they want to build capability for the enterprise to really go on and offer to clients, right? That's a kind of upsell or a cross-sell kind of mechanism they want to build into, which is little long, long-term cycle for selling. But that's the need of enterprises. Either it's a push from the client side that's coming in, or they want to build the capability. Those are two aspects that enterprises look at. From a startup perspective, they have few things to gain, and that's what we have realized. One is capability. So they tend to build their capability. So we have had a few startups who came to us and told, they don't have this kind of skill sets. Can you partner with us and provide that engineering capability that you have? Okay. Another one is, can you help us provide resources kind of capacity? Right. Then another one is investments. That's what the startups come to us. Sorry. Post that, one very important and interesting thing that we have seen startups coming to us is, there was this, Excel-based startup. They went to a client, a BFSI financial client, in the Europe region. It's a fantastic startup, very innovative, and it's there with customers as well. Now, what happened was the customer pushed them away because it's a BFSI customer. Banking customers typically want established companies. So they are not ready to do business with them, but that kind of solution does not exist anywhere today in the world, and they love that solution. Okay, but they can't buy it because BFSI clients want established partners, right? So they came to us and they're telling us, you partner with us, we'll get credibility, we'll get the name. So you come with us, you build the capability in you deliver. Our solution you deliver, and we'll help you deliver. The name is yours. And we took them, and the client was on its feet to buy them. And it's amazing $1 million deals, they are doing through this. So those are certain aspects the startups stand to gain. But the point here is, from an enterprise perspective, when they'll engage, either they want to build a capability or they have a customer. You need to understand that. And we'll talk more about this tomorrow also. But overall, you need to play the game right. Then only the enterprises, and the startup relationship really works.
Thank you. Again, when we look at the benefits that are there, but when you look at a new venture and you are looking for an engagement with a corporate, so what the corporate looks at, that is very important because, what should I have to offer to the corporate that corporate should be interested in engaging with me? So that is the next question, what the corporates looks for before engaging with anybody.
So, one thing that definitely any corporate would look at is whether your product is aligned with their strategic priorities or not, right? Because if that is not, then it's a failed marriage to begin with. Because if your product is really supposed to add value, then it has to be in line with what the corporate is actually wanting to do, actually willing to do in the market. And then that's the kind of evaluation they would want to look at, want to do in terms of understanding what to look at in the solution that you're offering to them. That is one for sure. The second is what kind of, if there is any kind of technical assessment being done, then yes, definitely what kind of technical expertise you're bringing on board, which and please don't get me wrong here, many organizations, many corporates do have a technology wing under them who are tasked to doing just what you guys are thinking of doing, right? So it always boils down to a question of make versus buy, as has been the case traditionally, historically, since supply chains have existed, right? Whether I can make this in-house or should I really go outside and have a look at a startup who can do this for me? And if yes, what kind of benefits I'll accrue, what kind of challenges I'll onboard, and what kind of risk I'll onboard. So that is the kind of evaluation, at least in my mind, what we have seen while talking to our clients is something that organizations look at.
I always want to give an analogy. Large corporates are like tanks. They're built for a specific purpose. They have shielding all around them. They go slow. They are made to run the business in a slow fashion, but very synchronized fashion. They move armies of people. So they are not made for speed. So when they want something, they really know what they want. And another part of the analogy is a tank prefers a tank. They prefer to deal with another corporate. Because a lawyer will talk to a lawyer, contract will be signed, and risk will be mitigated. All of them will treat each other at a peer level. Startup does not even have a lawyer on board. They will blindly sign if you're not taking their IP. They're happy to sign any piece of paper you want. So there is kind of marriage of unequals which is being proposed. And for the sake of discussion, I also will take, just let's say CIO's office, who runs the tech shop in any large enterprise. Without no pun intended, if let's take the name of Microsoft. Microsoft has pampered CEOs over decades. They sold the OS, the Exchange, the messaging, God knows what, everything. But every quarter, they were coming and telling him, boss, my product is at release version 10.9. In next quarter, I'll release 10.9.2.3. These 3 features will come. You can plan your hardware, software, employees, everything. Here comes software. He just has a half-baked cookie and says, I will make sure it will run in 4 days. It will work. It will scale in the cloud. It's just a different philosophy and method altogether. So you are actually challenging the very ethos which CIO has 30 years experience. You are just challenging what he has learned and lived in the last 30 years. So it's culture shock. Right. So it's a large culture shock for the whole CIO office. So, and let's hope the CIO has crossed this barrier and still gave you the mandate. So the methods and means and the quality control mechanisms and working overnight, 10 of the devs will sit, churn the code out. In last 2 hours, they do integration. And last 1 hour, they do testing. And next day morning, by the time the CIO comes to office, they'll be deploying it. The final production version of code. It never happened in the world. The old CIO never seen DevOps in his life. So they would have released 10 releases in the last 15 days. So it is a different world. So the articulation from CIO's office would have looked for a shrink-wrapped package. You are coming up with the a la carte, cooked on site, just-in-time package. So you are starting in a very two different worlds and you have to run together for a long time. So it is a very nuanced journey. I would always prefer you to have a third party, not try to sell my services here, but otherwise I have seen now one of the jobs I just recently won is large FMCG company. They attempted to do the startup thing, called for startups, problem statements, everything. 6 months later, nothing happened. The startups are knocking on the door, sending stinkers. Boss, humne demo diya hai. You said the PO will come. You said integration will start. Nothing. The processes, culture, and the way people work are grossly unfit to engage with startups. So to change an old anecdote, I will say, culture will eat innovation for breakfast.
So, so I'll share some. I mean, how do we select startup? I'll share our experience. So we have an elaborated 21-point framework. So any startup, if I have to go and partner with today, I measure it or evaluate it against 21 points, right? But I have to make it. If I have to make it really simple, I'll pick three simple aspects, right? One is I'll ask master, how innovative is the startup, right? Is it really bringing in some very differentiated capability that does not exist? Because you need to understand that today enterprises do not exist in silos. They are existing in a partnership or an ecosystem. If your startup solution is not very distinguishable, it's very difficult to penetrate the walls. Because there are partners who are sitting next to us, right, who have been working with us for years. We just can't leave them, right? So one is how innovative you are, right? The second one is how complete is your solution, right? Is it in bits and pieces? Because I have my clients who's already paying me millions of dollars. I can't risk the relationship just taking you there, right? And you provide a half-baked solution, right? Now, it's important to understand that don't come to enterprises, really, if you need just money. The VCs and the PE firms are the best for it. Enterprise and a startup game is a very different game. You need to realize that. It's an ecosystem game wherein you grow by 5 to 10 folds what you'll grow with VC. But you have to play as I said, you have to play the game right. Enterprise relationship is a very different kind of relationship wherein you tend to build an ecosystem that can grow and expand, from all sides. So just don't come to enterprises for money, right? That you're better off with the VC and PE for building the solution. Come to enterprises when you have some credible solution. And finally, the third point I'll ask myself is, how many customers do you already have? Because that gives you credibility. These customers may not be paying customers. It could be POC customers. It could be where your solutions has been tested and it's already running. That gives confidence to me to expose you to my clients and my relationships. Right? So those basic three things I'll tend to see it beside. But there are a lot of them, but these three basic things I typically see it.
Just want to add. couple of chicken and egg situations do happen. If you are in a B2B or enterprise space, it's impossible to get the first few customers. So the customers ask you, where did you implement it? But no customer gives you first implementation unless you have one implementation. So we actually personally have done lots of policies, innovation policies for state governments in India. And where we have put in, if a state government is procuring a service from a startup, they should not ask for prior implementation. We have put that explicit clause in at least 3 state government procurement policies. You don't have to prove your balance sheet, you don't have to prove your prior implementation.
Interesting benefits. Okay, looking at, now another point which is very important we should deliberate upon is that how this engagement is different from VC or a PE firm. That is very important because somebody who wants to engage with a venture capitalist and there is having an alternative of corporate engagement, what is the right way to go for it? Why? Okay, so how it is different?
So I think Naveen just touched upon it a couple of minutes ago. If you're really looking at maybe growing your product or looking at money, corporates are not the right space to look. Then yes, it's VC and the PE firms for you to just try and see how you can raise money to build on the product vision that you have with it. Because with growing products, you'll need to onboard more people. You'll have to look at other expenses. So you'll definitely burn cash, and that too a lot of it. So corporates probably will not be able to suffice that requirement. Where the corporates will definitely help is on the lines of exposure. Is as Murali just mentioned, culture eats innovation for breakfast, right? So allowing you to understand what the cultural impacts could be. Because see, it's not about just building a product and taking it to market and raising money, right? At the end of the day, if you have to survive in the long run, you have to have a very strong, structured organization that can support the growth path that you have planned for yourself, right? So yes, the guidance from a VC would be there, but as you would appreciate and you would yourself know, right? Until unless you get your hands dirty, you'll not be able to learn through somebody telling you to do something or telling you to look at something, right? So it's your own personal experiences that will determine how your organization should be structured, and that is where working with a corporate in their environment, as Murali was saying, PO takes 90 days to come, right? You are looking at a PO on the next day, probably on day 0 itself, you wanted a PO to work on, right? So how do you manage those kind of elements? How do you manage those kind of situations? It's all part of your learning game while you're growing into a much bigger organization, right? So from a corporate side, what is on offer is a lot of learning on hand by getting your hands dirty, by being experienced to uncomfortable situations, uncomfortable deadlines, timelines, and then still moving forward.
So we always say horses for courses, right? So VCs come early in the cycle, angels, Series A at best, and PEs when you become much bigger. And enterprises are there as a scaling target for you. If you want to sell 10,000 licenses at a go, enterprise is the only place. You get that kind of user base, you only get in enterprises. But having said that, but enterprises also becoming extremely smart. They have come up with something called CVCs now, corporate venture capitalists. You come, I'll give you my user base, also will give you token money. So they are forming their own VC arms so that they can look innovation adjacencies without actually going out on a fishing expedition where they're looking for space, agri, which are too far away from their comfort zones. So look, what exactly do you want? What stage of your growth or life cycle you are in? accordingly tap the right resource for the right purpose. They are not for the same time or same purpose at all.
So, without repeating again and keeping the financial aspects aside, you definitely get capital from enterprises. But I can name two things where really enterprises really differ from a VC for a startup, and we have seen this with like example that we have done. One is from a technology product roadmap. Right? So, some of the startups that have come to us, we have tend to shape the product and the technology for them, in terms of roadmaps. So what are actually clients looking for? So that's a very critical input. We have taken that input and provided and shaped the product roadmap for those startups so that a better product can be evolved. That's one area that the enterprise really differ from VC. Vis-a-vis VC can provide. Another aspect is the growth of business, right? So while enterprises can bring in customers to you, can bring in user base, etc. The important thing is it can actually help you generate some real revenue dollars vis-a-vis a VC, which can help on valuations. So VC will help you valuation, but actual on-ground revenue, enterprises can help you boost that quickly because of the customer and user base on-ground business that they can procure for you. And we have seen this. We have seen, we have worked with few startups wherein at least one comes to my mind where we have grown within 1 to 2 years, revenue from 5-10 million to 40-50 million in just 1 or 2 years. Right? It's phenomenal. Imagine on-ground revenue contracting, right? Which is kind of a little difficult for a startup to get it. So that valuation revenue conundrum, that enterprise can help solve.
Okay, so this discussion may have raised certain doubts in your mind, and you want to address those doubts to the panelists. The house is open for questions. Anybody having any doubt, you can please, somebody can pass on the mic, please, at last.
Yes, sir, I have two doubts. First is there in future we are going to see CSR of the company, Corporate Social Responsibility Fund, going into environment startup as a funding? If that, and what is the process you will going to do? And second question is that, how you are guys thinking that we can improve the corporate and startup world? Because there's a lot of problem from corporate side, I just tell you, payment delay, which is a basic problem that because they delay the payment so much that startup run out of the business, and which is not good for, I think, the corporate startup relationship.
Okay, already as per the existing CSR regulations, they can invest in a startup which is doing any of the SDG 10 related activities, and it is permitted and credited appropriately. And I have done a couple of them using IIIT Hyderabad as a mentor and a vehicle to deliver money to the environmental startups and social startups. So that is already there in the law, so you don't have to do anything about it. Second, payment delays is a culture of transformation. It takes time. And the company I referred to in the previous questions was actually setting up a separate channel to deal with startups where everything will be done in 15 days. Onboarding, offboarding, payments, contracts, everything is done 15 days. They have built a separate channel for startups. I guess others should follow the lead. Otherwise, if they treat you as normal vendors do not mind because these cash flows are designed to accommodate that kind of cash cost and that cycle cost.
So it's true, there are some challenges, constraints within the enterprises because over the years their processes are not geared for fast turnaround, and we typically go through this. Even now we are going through this every day. Whenever we work with them, typically they ask for 30 days. They won't go beyond 30 days of payments. So we have to convince them that our processes, they geared for certain particular days. So you need to adjust. But having said that, things are changing. things are changing thick and fast. So there are certain enterprises, they've done a little better. They're improving, right? And things will certainly change, right? But at the same time, what you can do now is there is always an alternate and an emergency mechanism for payments. If you push enterprises for that, they tend to switch on that mode. So you can always push them.
Any other question? Yeah.
Hi. So I am Anirudh Sharma, and I'm working on a tech startup. So there's one problem that we've been facing. It's again like a chicken and egg problem, that we need a great tech team in-house. So do corporates are they actually exploring such opportunities wherein they're providing tech teams or maybe some people who could be working maybe full-time with startups as an investment against equity? Or if that can be explored.
Sorry, yeah, I'll take it. So yes, a simple answer to that is yes. Technology teams, I mean the company's enterprise, at least I can talk about my company. Okay. Right? We have done this model with few clients, okay. And we keep exploring it. So it's not new. A lot of startups come in terms of, as I was mentioning, capability and capacity.
Right.
So a lot of them come. Can you provide or invest in us in terms of providing certain resources, technical resources who can work for them, right? Basically, it's a kind of engagement model that boils it down to, right? So what is an engagement model? Either I provide you resources and I pay, take the payment upfront, or I kind of provide you resources as an investment in you.
Right.
That is another model. This is a third model that exists that, yes, I like your technology a lot. I want to be part of your journey. I'll provide you all the kind of capability and capacity, but when you earn revenues, I'll take out of that profit. Right. That is another model that enterprises get into.
Okay. Right. So I have a follow-up question. So do you have a strategy or an approach that you could suggest to startups like us?
Yeah. So interesting. See, let me try and decipher the problem statement for you.
Sure.
Whenever you go and hit the door of an enterprise, you will first of all fall there, seeing the size of the enterprise and which team to talk to. Right? That's your biggest problem, where and to whom to go to enterprise. Right? There'll be hundreds of teams doing hundreds of work, and you'll be running here and there. You don't know where to go, which is the right team to follow, and that can help you. If an enterprise really has a corporate entrepreneurship function within them, a function that's dedicated to startups, that is a boon for you. That can really help solve this puzzle for you. So try and find that for the enterprises. Let's say if that is not there. The second step you can do is go top management down. Or at least a person down who knows what is your problem statement and which team within the enterprise can solve it. Right? And if that person has a authority within the company, it can really help direct things. That is another thing. Or even if you don't have that, it becomes a little juggling game, but you'll have to go through that maze. But most of the companies, especially engineering kind of functions whom they have, they, on the tech side, they get into these kind of relationships. So you have that scope there.
Okay. Thank you.
I'll take a different cut at it from a startup perspective or venture capitalist perspective. What you need is a venture studio. You need to get to any venture studio, and what venture studios, the way they differ from a traditional incubator / VC is that they operate in the middle. They take you at any stage of your idea, preferably early stage. They give you market and scale and a tech team, and in turn, that effort, that sweat will be converted into equity. Okay. So you'll be taken care of. So in early stages, going and knocking Naveen's doors, your head will break. So venture studio is a much easier place because it's geared to only handle this kind of situations. And they have all the means and methods, money, tech, all of it is in-house.
Okay. Thank you.
Nothing much.
Any other question, please? Okay, Thank you very much. It was lovely to have you as a wonderful audience. I will just say every question is having an answer, and answers raise more questions. And we should look for the answers and try to raise more questions out of it to create the ecosystem for startups. Thank you very much, and have a nice day.
Thank you, speakers, for that enlightening session. We would now allow a 5-minute break to begin with the keynote session. No, but we are taking a break, ma'am. Okay. So as
settle down, please. Radhika, may I request you to escort our guests inside? I think after lunch, the tea break is very important. Everybody was feeling a little. Okay. I hope you enjoyed the power packed day today. It was worth it? Okay, great. All of you will have enough time to speak to the various people we have from various organizations over a cup of tea, coffee. Before we break, we'll take an hour and a half break or so before we start dinner. Dinner would be at the same location. Yes, we will have people coming in. Remember, there's a day tomorrow. Today is only day 1. Okay, we have already had a long day today. So today, this would be the last session. We have a gentleman from Niti Aayog who's here. We'll introduce you to him. He's somewhere there. Okay, I think he's busy talking to some of you. So we'll request our guest from Niti Aayog AIM team to meet our incubatees later during tea break. So if all of us are here and all of us are inside, okay, great. So we can start the last and the keynote address for the day. Let me have the pleasure of introducing to you someone very special. From battlefield helicopters, military operations to serving the royal family, from working in financial services for the world's wealthy as a vice chairman in Standard Chartered to entrepreneurship. From remembering places on maps of Northern Ireland, Balkans, Iraq and India to embracing diverse cultures, traveling the world, engaging philanthropy and leading people. Today we have the honor of hosting Richard Patel, who's the co-founder and CEO of True Beacon, senior advisor to Zerodha, an avid India watcher. He will be in conversation with Pawan Danwar, who's the president and CFO for HCL Corporation and many other entities. You heard him speak in the morning. I will try to pitch in a little bit in between. So with that, let me warmly welcome Richard to join us on the stage and Pawan to also join us on the stage.
I'm very easily led.
Lovely. So, you know, I'm going to start by raising a question and an explanation also in the same way. I cannot believe today that we are actually speaking to, let me borrow Pawan's mic, I'm so sorry. I cannot believe that we are actually talking to ex-Royal Air Force, combat pilot, running a successful hedge fund in India, a British national, right, who's actually now been in India for about 30 years, closely working, traveling. He also served and had a year of stint with the Indian Armed Forces. So what an absolutely interesting career to have. I cannot imagine the journey and the learnings that he's had. Which also makes me believe that you believe in India, Richard. You believe in India shining in the right way. You believe in the India story, which means he believes in your journey, your story. He believes in all the startups who have gathered today. With that, I'm going to ask a question to begin. Tell us your experiences about India. Tell us about your association and tell us why do you believe in this young country, especially in the ecosystem of startups?
Thank you, Anuba. And first of all, thank you so much for asking me to be part of this today. I'm so impressed with the university. It's the first time I've been here. I've been to the Shiv Nadar schools. I've been to Vidya Gyan. I went there probably around 5 or 6 years ago. I was talking to some of the students actually from there who are wandering around the university, aspiring students here too. So I'm very impressed with what I've obviously seen today and also this initiative. My association with India, as you rightly said, started 30 years ago. I came to this country almost by accident. I was going through jet training in the Royal Air Force, joined the military, and we had a program that existed at the time where they sent you anywhere in the world on military service as long as it was charitable and it had some sort of leadership element to it. And so I managed to persuade the rest of my pilots who were sitting in a dark and dank and wet crew room in the east of England that we might want to go to India because it was so exciting. And a couple of weeks later, we found ourselves landing here in Delhi and then traveling on a train down to Bhopal. And we worked in an eye hospital for 3 weeks. I fell in love with India pretty much there and then for lots of different reasons. I think that whichever metric you choose to evaluate a country, India, without doubt, has extremes on every single one of those. Some of those are very positive, some not so. They're still developing. But this country is remarkable for its diversity in virtually all of those facets. And as you said, you know, I've been traveling back to India over the years and living here and serving on exchange with the Indian Armed Forces. I think fast forward to today, I often wonder to myself, and I know obviously we're only just getting back to global travel, and so we're not quite representative, but I wonder to myself why more foreigners like me are not living, working, operating here, and there are possibly plenty of expats who come and do a couple of years, disappear back to wherever they came from, the US, the UK, or whatever. But actually, it's a very different feeling to be here. In my case, for the first time in my life, at the age of 52, I'm now an entrepreneur, which I became 2 years ago. So you guys are teaching me, not the other way around today. But I'm in part doing that because of India and my love for India, but also this particular point in India's pivotal history and the opportunity here. In part because I've always wondered whether I could be an entrepreneur. I'm not sure if I can or not, but I'm giving it a try. And in part because of my amazing co-founders who I met a couple of years ago. So to answer your question, I absolutely believe in this country, what it's capable of in the future, and I think this has to be, and I talk to a lot of promoters of all different ages and backgrounds across India. Everyone is unanimous in saying, listen, India's time really is now.
Wow. That's great to hear. But, you know, Richard, whilst we have physically today a lot of incubatees across a wide spectrum, we also have our students who have logged in from all over the country. It's still a virtual semester. It's very difficult to take a career leap from where you were, what you were doing, into the world of startups and entrepreneurship. So what motivated you to take this career leap?
I've been very fortunate in life. My life, a lot of people see me sitting here in a suit and assume I've had a very privileged upbringing in the UK and born with a silver spoon in my mouth and so on. But you know, everyone's got a backstory. I'm sure everyone in this room has got a backstory. Mine was that I did come from a very privileged background in the UK, lived in a large country house, but all that came crashing down one day when a couple of blokes knocked on the door and said, your parents have been involved in a disastrous business deal and we're repossessing your house. You've got about an hour to leave. And I left that day, never seeing the inside of that house or much of my possessions or my family possessions again. And it taught me something. Of course, at the time it was very traumatic for my parents, my family, and so on. But it teaches you the fragile nature of wealth. It teaches you something about risk. For me personally, it meant that I went out of my nice little cozy private school into a state school where I was mixing with people from all different backgrounds. And actually, although it was very traumatic at the time, perhaps that's armed me for my future. But I think in terms of, you know, that going into the military, which, by the way, I failed dismally to get into the military that year and went back 2 years later and tried out and managed to get into the military. From there into working for the British royal family and then into banking. It's all been slightly linked, slightly serendipitous. And I guess I'm one of these people who, has had a large degree of luck to be in the right place at the right time, but perhaps also has known how to take those opportunities and take risk. But this is a very exciting chapter for me as well.
Absolutely. Pawan, I'm sure you are dying to ask Richard the next set of questions.
Yeah, so I'll pick a few pointers, and you guys also can, ask in between whenever you have any question. Richard, it's amazing, like you started with a fighter pilot, and then you into Standard Chartered Bank, and then is a entrepreneur journey as an advisor here and then created a fund. They are not, except last two things, they are linking each other. It's a very different way you led your life, and not related, I would say, in a great extent. So is all came by accident, or you chosen that way, or how it all happened,
From the outside, perhaps they're not related, but actually if you think about it, my first career was in the military, specializing as a combat helicopter pilot. But then my transition to work for the British Royal Family was on secondment from the military in my first iteration there. I went back later as a civilian. And so that was the transition from career number one to career number two. Career number two to number three was I went to work in private banking. I probably didn't know a lot of private banking specialist knowledge on day one. I'm not sure 6 years later whether I knew that much more. But I knew enough in terms of the network. I had a fascinating job working for Standard Chartered, where I would cover ultra-high net worth families, typically billionaire families across Asia, Africa, the Middle East, and Europe. And Standard Chartered is an amazing franchise, obviously very deep relationship with India historically. I think it may still be India's largest foreign bank as well. A very impressive organization, a very impressive leadership as well. But it gave me the opportunity really to immerse myself in leaders, entrepreneurs, to see and hear how they had created amazing companies. Some of them have also created a lot of wealth along the way. Some of them had lost wealth and regained it. But I think one of the glorious things about getting older is you think to yourself, hey, listen, perhaps I could do that as well. And that was the thinks bubble I had, I guess, a few years ago.
You mentioned that at the age of 14, you wanted to get into the military, and you could not clear the entrance there or whatever. So it was a failure at that age, if I may call it a failure. So what kind of a, how you take it, because in a startup ecosystem, failure chances are very, very high. And, success and failure go together. How, can you give just some tips to the people, how to take the failures? Because success is very easy to sometimes, take it, but facing failure and learning out of it, how your experience on that?
Yeah, I have two attitudes to failure now. One is as a parent, strangely enough. I've got 3 children, they're all teenagers, a boarding school in the UK and a university in the US. And on the one hand, as a parent, I don't want my children to fail. Because failure hurts. Failure damages your confidence. It damages your self-belief and so on. On the other hand, failure is one of the greatest attributes you can have as an individual if you learn from it and if you are resilient enough to embrace everything that goes into that failure. For me, it was very stark, as a teenager and I'd always wanted to be a pilot, and going for pilot selection, and they have 5 categories in the Royal Air Force. You can either go to get a cadetship, the top category, or a bursary, the second one, or you can start officer training immediately, or you can start in a year's time, or the last one is you're dismal. I don't know why you bothered coming today, but anyway, you're a waste of rations, and you may as well go home. Right now, you've got a legal right to reapply, but I wouldn't bother if I were you. And I got the last one. And I was crushed. But I went back 2 years later, and I got the top one. And I guess I possibly wanted to prove it to myself that I could do that and to turn it around. Some of it was just about maturing. Some of it was that I had received some great training, had learnt from an amazing peer group that I was suddenly interacting with at university and so on. But it taught me the power of second chances. And in my organization now, second chances I will always give, always. Third, hardly ever, but second chances for sure.
Right. Richard, you have seen, in fact, you have worked in various geographies and various places in the world, like Northern Ireland. I've been there and I love that place. So, and you are very familiar to Indian ecosystem, etc. How you compare it and how you find that India is different from those, and what learning or people in this environment can you just kind of share some learning which can be relevant here for our people here in a startup, which can be useful for them to succeed.
Yeah, it's an interesting question. I get asked that a lot as a foreigner who's now living and operating here and so on. And I think that I've been very fortunate in my life, as you say, to travel the world, to mix with people from all different nationalities and backgrounds and so on. Listen, India is very exciting. It's got a lot of things going for it, not least, I'd say, the number one attribute, of course, is the incredible human capital. I live and I'm based down in Bangalore now, which is perhaps arguably the hub of those bright young minds, men and women who are highly educated, motivated to build companies and to build organizations. So that is, as a foreigner, really takes your breath away here. And I look at supposed entrepreneurship and tech hubs around the world, and places like Bangalore clearly are global centers. And not just, they're delivering as well. They're delivering in terms of the sorts of organizations that are springing out of there. On the other hand, I would say that I'm looking out today, a couple of things that I notice as a foreigner. If I was sitting in a room doing an equivalent event in London, which I've done many of, clearly I don't see any other people with, foreigners. And that is, something I'm very passionate about. We need to attract foreigners here, not because we need them, but because they act as a link, as an ambassador, as an accelerator for Indian companies to go back outside India and provide solutions to the world, not just to this country. This is a big market. It's a huge market, but it's not a global market, and we need to see more entrepreneurs with global ambitions starting companies here in India and taking them to the world, and foreigners coming here, not just bouncing in as CEOs of multinationals and going off and, but actually being entrepreneurs here will really help that. I also notice we don't have the largest percentage of women in the audience as well. And that, again, depending on which industry and so on you're associated with, I see that a lot in India. That is quite striking for me. And clearly all of us need to, address that, because very often we're wasting such amazing human capital that's not employed in the entrepreneurship ecosystem. And then last but not least, I'd say that sometimes here in India we make things a bit too hard for ourselves, and getting stuff done here does take a bit more bit more of follow-up, as we were chatting on earlier on, and tenacity. But having said that, overwhelmingly here, it is just so positive. And I think that, of course, we've all been through a very difficult time wherever we are in the world. I've spent much of the lockdown and the pandemic here in India. And this country, of course, had a very, very rough time, 5 or 6 months ago. But it's, as we come out of this, I think India, this is all about global competition. And if we look at the New World Order, the relationship between the US with China, the way that India is propelling itself to the world's third largest economy, and indeed being more vocal, more influential on the global stage, which it should be, absolutely. And the rest of the world, including the US primarily, is recognizing that India is needed now. So I'd say that.
Okay, thank you for that, Pawan. Let me comment. on one aspect of what Richard said. Thankfully, we at Shiv Nadar University firmly believe in women power. Shiba Khan is the CEO of Adult Incubation Center. We have a vice chancellor who's a woman. So hopefully, and we have our young startups here who are, some of them are women, and you'll hopefully meet them later. But the question which I have for you is, you are probably at the top of the food chain, right? And you started at an advantage with the top of the food chain. From startups who are early stage, oh, I didn't notice you. So the startups who are early stage, whether they are student startups at the university or the incubatees who we are incubating here at, what should be the short-term and long-term goals for any of our incubatees? We hear a lot of buzz about unicorns, etc. So what would be a realistic goal, and how should they go about doing that?
Yeah, well, first of all, I'm going to contradict you. I'm not at the top of the food chain, for goodness sakes. I'm very much like you guys. I'm only 2 years into being an entrepreneur, and you know, yes, we're very fortunate. I'm fortunate to have great co-founders. You know, we've all between us got a track record in doing what we've been doing. But you know, it was 2 years ago when we started True Beacon. You know, my co-founders and I, or Nikhil Kamath and I, were here in Delhi, going around as many of you will be doing, attracting our first ever clients. You know, putting together our PowerPoint decks, our models, and so on. So, you know, we're exactly the same as you. They, of course, as co-founders of Zerodha, have been incredibly successful. But every entrepreneur starts somewhere, and so I think that's very important to bear in mind. What little I've learned about entrepreneurship over the last couple of years, and in the course of my life, hopefully being relatively entrepreneurial in other chapters, is that it's, I think you have to allow yourself to be quite agile as an entrepreneur, to switch between the very tactical and the very strategic in a matter sometime of seconds, because the tactical will trip you up and, you know, has got a big operational threat to your company. And without being strategic, you won't grow your company. I would say my own thoughts about growing a company is that you have to start. You have to start somewhere. You know, I think I talk to lots of people who wait until everything's totally gold-plated and then they're off to the races and so on. And I think sometimes in life and in entrepreneurship, it's better to start at 90% and start than to wait for 100% and 3 years down the tracks you're still twiddling your thumbs. You've missed out those great opportunities. But I also think there's a danger as an entrepreneur of really projecting where you're going to go when you start your company. I mean, I have to confess, you know, True Beacon, it's an asset management company. We started with a couple of funds here investing into the public markets. We've done very well. We have now 300 or 400 ultra high net worth clients, both here in India and overseas. But do we know exactly where the company is going to go in the future? No. Am I going to sit here and say I've got a 5-year vision, a 10-year vision? No. I think a lot of it will be driven by our clients. You know, maybe they will say to us, listen, you know, we love your funds, but we want you to do more strategic ad activities, like becoming an old-fashioned merchant bank that's refashioned for today's age. Perhaps they'll say we want another product offering. So I think, you know, sitting and planning, much like planning your own life, which is fraught with danger because, and indeed disappointment, if you overplan. I think planning your business, yes, of course, you need to set yourself very clear goals and form a team, which is critically important. But beyond that, to give yourself the flexibility to adapt your company in any which way. And maybe because you've been disrupted, which is a great danger here in India. You know, there are so many great, bright minds who are springing up in all the cities across India. And now, of course, in people's homes across India, in rural India even, that you're in danger of being disrupted. So I don't think a big strategic road plan for the next 10 years is necessarily the way to go now. Capitalize on your business idea or plan can, I think, be counterproductive.
Zerodha, you are associated with that very successful company, one of the unicorn. People look up to that company and without raising any external money or investment. What is the secret of it, if you would like to share with us? And some tips to our young startup here. Some 2-3 tips to them, like how they can be, make their organization like that scale. So is there any secret of it, or would like to share some tips?
Well, very sadly, I can't take any of the credit because I wasn't there during the formation of Zerodha, but and now under True Beacon, both Nikhil and Nitin, the two brothers who founded Zerodha, are now my business partners. But of course, I've got to know them as individuals. I think entrepreneurs generally have personal qualities that will mark them out for success. I think the two brothers were able to work together seamlessly to work out their skill sets, to differentiate themselves in building Zerodha, to attract really great people as well. And of course, Zerodha started off disrupting through price, but now is known and hopefully enjoyed by millions and millions of consumers here in India for its tech platform and the way that it's very intuitive, the ease in which people are able to now access the capital markets here as well. So it's of course a volume game for them at the price point that they're operating at. But I think in terms of the founders, Nitin and Nikhil, from what I've seen as they've become friends as well, they have tenacity. They're able to divide the duties of running a business very, very effectively, so that they can both manage people and technology and finance all in tandem. They've got agility in terms of leadership. They have managed to retain an exceptional team, but also have had very low turnover of the team. So they got to know each other incredibly well. And they have built it not by, throwing millions of dollars around, crores and crores on advertising spends and so on, but it's primarily been word of mouth that has driven the success of Zerodha and also gained a following. And I think last but not least, they don't take any of that for granted. They're both incredibly modest individuals. And I know that they're thankful every day that they've got a loyal customer base here in India, and they strive to make Zerodha and the products better and better. And last but not least, I think whether it's Zerodha or their competitors, I think one of the great things that has happened over the last 10 years or so is that more and more people across the whole of this country have access to the equity markets, things that we perhaps in the West and elsewhere in the world have taken for granted. A very high proportion of individuals, whether it's through their pensions or through direct equities or through some of the privatizations that we saw in the UK back in the 80s, now people in India are able to participate in the capital markets here, which is so important.
Do you have any questions from anyone here, please?
Good evening, Richard. Welcome here. It's nice hearing you from you. And Zerodha's story everyone knows. But Zerodha's story everyone knows. And how Zerodha is building the people, like investing in different asset class. So what do you think about end money? Because there's another startup, like aggregating the financial information from different places. So what do you think about the startups like end money? And is Zerodha positioned for that? If you know about end money, because they are investing in different...
Sorry, I didn't quite hear your question. Could you just repeat?
Okay, what do you think about end money? Kind of a startup tech platform, which, taking the information from various platforms, from NFCI, and then giving the recommendation to invest in different platforms. So,
So, sorry, I think the gist of the question is how we're going to use technology to inform investment decisions.
Yes,
is that
Come
what
on,
you're saying? I mean, we're seeing that around the world. It's starting to happen here in India as well. you know, Zeroda is a broking platform with a number of different tools, but they don't offer advice as such. I think that will become more prevalent here, but we're yet to see, even in other markets, more well-developed markets around the world, that really be embraced by the consumers yet, partly because we're waiting for it to be tried and tested. Partly because it's very hard to defend as an industry. Obviously, once you integrate, whether it's artificial intelligence, robo-advisory, then it's very, very easy to replicate. One of the things about banking that I learnt is how commoditized banking is in general, and how easy it is to replicate product. And so you have to differentiate yourself on something else. But yeah, it's obviously the markets here. Listen, you know, we're for example, we're a hedge fund now. The first hedge fund, you might call them something else here, started in 2012 in India. In America, it started in 1965. So we have got a way. On the one hand, we've got a way to go in terms of some of. On the other hand, because of India's and companies like Zeroda, it's obviously being able to leapfrog some of the technologies that the West has had, and actually is obviously now much better than the West. So you have to choose where you look at in terms of financial services.
Okay, just a second question, a bit different. Because there are two thoughts going on. Because every startup has a dream to go to the IPO route. There are a lot of questions because internet valuation is a big question. You know, a lot of people, I don't want to name Rakesh Jhunjhunwala, is always says that Zomato valuation is crazy. But then every internet startup like Zeroda or Cred is so much scalable because the model like IFL, which is more of a traditional model, but in the parallel side you have Zeroda, Zomato, where InfoHedge has invested early because the kind of scale. So do you really think the valuation which they are rightly charged is justified, or the people like, because a lot of IPOs are coming, and I said Paytm is coming big way. Because when these bulls say the valuation is crazy, that deflates the IPO market in coming days. So I just want to understand what are your thoughts about the IPO valuation of the internet companies.
Yeah, well, listen, whether you're looking at private markets or public markets, there's no doubt that valuations are, you know, quote unquote, stretched now. On the one hand, if you're looking at the private markets now, and you're looking at India, you know, people, you know, these valuations are largely drawn by India and where it is placed in the world, the addressable market here in the country. But also the liquidity and lack of other investment destinations globally. And so, yes, they're inflated, but then again, I think we probably said that this time last year, did we not? And perhaps in 5-10 years' time, we'll be looking back and saying, oh, you know, we actually, those valuations were an underestimate. So who knows? Who knows? I mean, I would say that if we look at the capital markets, then we have had an extraordinary period since the middle of last year, where we've had a very largely sustained bull market. That clearly has to come to some sort of end, or indeed has induced volatility at some stage. We'll see whether that's caused by systemic issues, by domestic issues, by you know, macro issues, or indeed by macro politics. So that, I think, we all need to be braced for, and which is in every cycle. When that's like to happen, is that going to be next month? Is it going to be the end of the year, next year? Who knows? But volatility at some stage will return to the markets.
Let's move to some other questions. Professor Mehra, I know that you wanted to ask Richard some questions. You go.
Richard, I am really impressed by your shift from army to financial world. Okay, so what are the learnings of army, armed forces, that actually became handy to you in the financial world?
Yeah, it's a good question, because on the face of it, what on earth has the military got to do with it? I'm looking at a distinguished Major General in front of me here, of course, from the university, and we found out that we went through the same course. He looks younger than me, so you're probably thinking he went after me, but strangely enough, he actually did do a course or two ahead of me. But on the face of it, that the military is often seen not just in the UK but globally as a very hierarchical, constrained organization that takes orders and issues them and derives results from them, and that's couldn't be farther from the truth. On the one hand, we met a couple of hours ago. It's probably spent 20 minutes together. We're buddies already, and we're buddies because we went through the same course. We identify with the training that we had. We kind of know each other's background and foundations and so on. So there's a natural affinity. So on the one hand, you have all of that. On the other hand, the learnings that I've had to really take into the private sector now is that when I meet, for example, a very talented data scientist, I have no reference point on that woman or man whatsoever. I mean, they'll be charming people, I'll talk to them, but from my own background, I've got nothing in common with them whatsoever. I don't have that shared knowledge of journey. And so that's something that you have to be, I think, as an entrepreneur, very conscious of, that actually it isn't, you don't want to try and replicate yourself or your background or your qualities. You absolutely need to get diversity in. But also from the military, almost an obsession with your client in the private sector is kind of, in the military, I would argue, we weren't necessarily obsessed with our clients' buddies, the people that you served alongside. You didn't want to let them down. You would routinely go out and risk your own life, and others around you will risk their lives, and never for 1 rupee of bonus. The first time I ever got a bonus was, in my 40s when I worked for an international bank. I was thrilled. Wow, I couldn't believe it. But it was, before then, I used to, along with all of my colleagues and along with everyone who serves in the armed forces here, you do it not because you're paid to do it, but because you feel duty to do it. And I think in an organization, if you have that duty to your consumer, your customer, that drives you a really long way. So, last but not least, just coming back to the hierarchy of the armed forces, when you're serving a long way from home, you are trained really well. You're empowered to do X, Y, and Z. But as a general, when there is a firefight up on let's say the northern borders of this country, and you're sitting in the command center, which is hundreds of miles away, you're not going to direct what goes on in that firefight. You're not going to direct your men and women and how they're going to achieve the operational effect. That's up to them. And I think that freedom of operation, the ability to think for yourself, be, if you like, slightly entrepreneurial, albeit on the battlefield or in the air or on the sea, is something that I've taken with me to the private sector, and I value that. Someone setting very clear boundaries for me, equipping me to do something, but then leaving me to achieve it in whatever way I think is most appropriate.
Yes, General Jay.
During the course of our little drive around the campus, we had the same conversation exactly. And we discussed this, and Richard mentioned that, it's a people connect. The people connect, like you don't do it for a country or for some fancy cause. You do it for a buddy. You don't let them down. You don't let the unit down. And should there be a conflict between, or there's a prioritization between somebody and the greater cause, the higher cause, then you put the higher cause first. Okay, so that people connect and ability to, or with experience and slow, not getting so much, you don't get so quickly affected by things. So you learn to handle people, you learn to judge people, not judge is the wrong word, you learn to get along with people in a very nice way. And that goes across any business space or whether it is education sector, any other sector, it doesn't really matter. But how you connect with your buddies, your subordinates, and with your superiors, that is all, that counts. And whether a guy is data scientist or agri-scientist, it doesn't matter. You can figure out how good is he. And if he's not good enough, you can get somebody else. But that whole thing has to be, I would say the army ecosystem or the forces service ecosystem teaches you that. And if you get that connect, then rest of it is just details. You're discussing the same thing.
So bringing the conversation back to, okay, we have a question. Yes, please.
Sir, my question to you is that how has been the journey from how is the journey from being associated in an advisory role to confounding a venture with the same team being on you?
Advisory role to actually starting up something myself?
Yes, sir.
Yeah, listen, I mean, I learn every single day. I learn from my co-founders, I learn from my team, I learn from amazing families here in India that have started very successful corporations like HCL, and I think that I'm a bit of an old fogey now, for goodness sake. Now I'm in my 50s and have got 3 almost grown-up children, but hopefully I'm quite young at heart, but I also believe I enjoy working with young people. We were also saying this as we were driving around. I think that it's something that I took from the military, as even in my my career, you'd have new recruits coming in all the time, and you might only be 3 years ahead, but you were teaching them, and there was a continual process. But now I find myself learning from 25-year-olds who are experts in investment research or data science or technology or whatever it might be. So I'd say it's very exciting, it's very empowering. I'd also say that keeping, I'm never going to change. I'm never going to be a data scientist, but everyone in my organization knows that. They know me, they know my limitations. I'm interested in it, but I'm not going to be a practitioner of that. It's too late for me to change. And that wouldn't be a good use of my time or anyone else's time either. So I'd say it's been a really exciting journey for the last 2 years. And I think that coming back to the point about clients, I was chatting to many of you earlier on with your organizations. When you get your first few clients, it's amazing. They're trusting you, in our cases, with their money to manage. In many of your cases, they're buying your products or using your services. And that's really thrilling, because you're able to build a community, in our case, of amazing families that are coming on the True Beacon platform. But in any case, you're getting continual feedback from them. So to answer your question, it's a really exciting, I'm playing catch up to many of you. I'm only a 2-year entrepreneur, okay? So many of you have had many more than 2 years experience in this field. So I'm learning, again, partly why I'm here today is to learn from you.
Thank you, sir.
So maybe I can ask one question before we move on to the audience again. Your company is just about 2 years old, and in these 2 years, we've, of course, first faced a huge pandemic. It's impacted, and when we talk to our young incubators, we hear a lot about the challenges of facing the customers or getting revenue or getting any traction due to COVID. So how has COVID impacted you, and how has the organization, and how has that impacted the business world? And what do you do about it?
Yeah, so I think, for everyone, I think probably the majority of the audience would agree. On the one hand, the enforced isolation, the time, the increased use of technology, the more transactional use of business meetings have been a tailwind to many companies. One of our biggest advantages is that we had opened up about 6 months before the stock market, plunged last March, and we were invested. My partner Nikhil had the foresight to be configured in a way that we were able to outperform the market very comprehensively. And so for us, as a startup, all of that, of course, can allow you to demonstrate as a company what you can do. It also means that you have enforced time to really concentrate on building a company. But no doubt it's been, on the other hand, a huge disadvantage for us in terms of not being able to go out globally to attract capital, to talk to promoters who may be invested in India right now, maybe should be thinking about it. A lot of the NRI community are already investing into India, but we want to see more individuals who traditionally have been investing into China, for example, rebalance their portfolio, whether they're living in Sydney or San Francisco, into India, because it should be a sizable part of everyone's equity portfolio. So the lack of the ability to get out, to interact with our client base globally, has undoubtedly hampered our growth. But I think as we all come out of this, I think everyone in business, wherever you are, not just in business, in organizations, we've all had to adapt and so on. I think the biggest possibly question is, where do we go from here? How do we, once this virus is under control, and is something that we truly around the world live with, and we're not in that phase yet, sadly. But when we are, what does this mean for how we all work and how we interact? And I don't think any of us have really figured out that. I think for us, like many of you, we're a new organization. We're still building a culture. We're building a team. We're learning from each other. We're developing relationships and trust and so on. Cannot be done solely on Zoom. And they have different solutions for how we all get back to the office, or indeed if we do.
Absolutely. I think we had a question in the back.
Hi, I have two-part question. The first part is hackathons. What are your thoughts on hackathons which are happening in India, and how you think that will help the technology startups to grow? Second part is a crowdfunding. What are your thoughts on the crowdfunding, because there are many startups which the VC do not understand the concept and what we are doing to do. So you think that crowdfunding is going to help them in coming in the future and increase the startups number in India?
Crowdfunding I'll address. Sorry, what was the first question about?
Hackathons for especially for young students, so that they can get better in tech.
Okay, fine. So let me talk about crowdfunding first. I mean, obviously any type of funding is additive to the ecosystem. And I think what we are seeing, obviously in terms of the funding of entrepreneurs globally, is an increasing concentration of the usual suspects sitting out of the US in particular, but other, and indeed here in India, but especially the US, who are writing very big checks to organizations. So I think it's additive. I think it depends what type of organization, what type of entrepreneur you are, and where you are in your ecosystem. But it's it's certainly not negative. There's no right solution. It depends on capital and how you want to raise it and when you want to raise it, and crucially how much you want to raise, and the certainty of raising it as well. And sorry, the second question.
I think the question was the hackathons, the competitions that happen for tech company. How you think that will going to help the college students in India to become the better in startup worlds?
So a lot of companies today conduct industry competitions or coding competitions, which he's calling as hackathons. How are those competitions helping the young students either set up their own companies by sharpening their skills, or something like that? Am I right?
Yeah, so I'll answer that through the lens of banking. And again, having worked for an international bank and seen all of the ways that they are trying to incubate entrepreneurship, coming up with fintech solutions in particular. Again, all of those are very, very positive. It comes back to the point of who's going to come up with the solution fastest, who's best able to not only think about how you disrupt existing industries, but also come up with meaningful solutions that can be operationalized. I personally think that that's probably not best done within the industry. I think that, let's look at banking in particular, we're already seeing a huge change in how individuals are able to operate. I guess over the next 10 years we'll see how we can all, payment systems will not be domestic payment systems, there'll be international payment systems. The future of currencies clearly are under a huge question mark. But the solutions I don't think will be developed by any of the existing international banks. I think it'll probably come from somebody or organizations outside the industry. But those are all anything that helps the ecosystem, anything that allows you to road test your solutions, anything that allows you to learn, has got to be very positive. I think for all of you, one of the things I learned again in banking, I thought at the outset that it would be rather, if I'm honest, I thought it would be rather dull and boring because it's finance. I didn't necessarily have a finance background, although I'd done a business degree, but not finance. And actually what I discovered that you literally had entrepreneurs in every single industry on the planet. And that made it the most interesting job. And so for you and your businesses, there's not one solution that fits any one of you that can be transposed across everyone in this room. So I think you just have to be very selective about what you participate in personally, how you use your time. Time has to be your most valuable resource right now, particularly at the relative start of your journey as an entrepreneur.
Right. Of course.
Hey, Richard, I have a question. So, if
I'm sorry, the acoustics in here are terrible. You have to speak up. I'm so sorry.
Okay,
Or I'm going deaf from being a helicopter pilot, one or the other.
All right. If you look at the number of startups, at least 5 to 6 startups out of every 10 is technology or internet-based startups. And then you have startups on the finance domain, or then you have socially responsible startups on CSR front, right? You hardly get to see startups on the manufacturing side. So is India following the US model of becoming an internet/service-based model? Are we not looking at a manufacturing kind of a...
Yeah, it's a very good point. In fact, I was talking about this in the context of the UK only yesterday. And what we saw in my little tiny island that I come from is a total collapse in the manufacturing sector. And especially possibly driven by Brexit, question marks over our ability to be a global service providing country. And then you strip away that, and what else do you have left? I think you're right. People are focused on technology, but manufacturing is important. And I think what I would say about the pandemic, just to address that, is that people have seen, one of the reasons we've got, runaway inflation in some countries, or not quite runaway, but we've got significant inflation around the world now, is obviously driven by the disruptions in the supply chain. Much of that is driven by our over-reliance on 1 or 2 countries around the world in terms of manufacturing. And I think that needs to change. And that will be a net beneficiary for India. But also, I think it depends, what manufacturing. I agree with you. The incumbent companies here. There's a big domestic manufacturing base here, of course. Maybe it's not quite as exciting to the youngsters who are starting out as entrepreneurs these days, but it's important. It's important for India that it develops its manufacturing base, not just domestically, but internationally. And I think, to come back to a theme I also talk about now is this, the ability for entrepreneurs not just to concentrate on India, maybe that's the first step, but really to have global ambitions. If you can do it here in India, and you can roll it out across this vast country with its vast competition, why can't you take it to the rest of the world?
Yeah, sure.
Hi. So my question is just a curious question.
You have to speak loudly.
Yeah. So sorry for that. So my question is, why choose India, not UK? Like, is there any difference between UK and Indian startups?
Why is the really bad acoustics?
Why you choose India as compared to UK startups actually?
The difference in the startup ecosystem in the UK and India?
Yeah.
Is that your question?
Yeah, exactly that.
Yeah. So there are differences. I mean, we are a small market. You know, we've got, you know, barely over 60 million people as a population in the UK. Obviously, we're a good springboard to Europe in terms of export and so on, but the domestic market in the UK is tiny when you look here. And I think one of the things that you see, so one, it's a tiny market. Secondly, it's a relatively well-developed market in terms of the organization of industries that exist within the UK, and therefore disruption, aggregation are much more difficult. And thirdly, I'd say that the costs of putting together new startups are sometimes very significant entry barriers. Here in India, of course, those entry barriers are typically much smaller, number one. Number two, the market here is vast, the addressable market. And thirdly, just virtually every single industry that you look at, every single sector, it can be aggregated, is turning into the organized sector. It's just relying upon you guys and girls here who are going to drive that. But even if we look at, companies like Zerodha and their competitor base as well, only really scratch the surface in terms of giving people access to the capital markets here. And that's the same in virtually every industry. The unorganized industries in India are very significant. That will change hugely over the last 10 years, and over the next 10 years, and you people will be at the helm of that.
Thank you.
Let's pass the mic to...
Just a statistical question. In the case of utility infrastructure, startup will be good on the ranking India, Australia, Canada, and USA. Which will be the best place for the utility infrastructure startup?
I'm not qualified to answer that. I don't know. Is the key answer there. All I can say that this country is moving on really, really quickly. I mean, I'm an Indian taxpayer. I live here. I'm a resident of India. This is my base, and this is what I know so far. So I'm not going to try and answer that. I don't know. I'm sure you're probably more qualified to answer that, Pawan, than I am. All I can say is there's a big competitive advantage here in India, and let's see what happens in the next 5 years or so.
Thank you. Pawan, would you like to take that? To answer? No? Okay. So
but next time we'll get an Australian, a Canadian, and an American on the panel as well, and we can battle it out.
All right. We're also mindful of time, and we do want to have Richard talk to some of you in some kind of a 10 minutes breakout session, so reserve your questions for that. I have 2 questions from the university perspective. There's a large student base who's logged on. India is a booming market, and whilst we have a recession and a tough job market, but still it's quite good. Students are getting good jobs, good salaries. It's easier. Why get into the startup world? That's first. Second, we also have a young incubation support center here, which is Atal Incubation Center, led by Shiba. What role do you feel universities can play, and how should we build the ecosystem for students who want to start up? It's such an important area for our government, for our country.
Yeah, I couldn't agree more. I'll start off with the second question. And in my previous life, when I was working for Standard Chartered, I used to run something called the Future Global Leaders Program, and we used to take these young guys and girls who were typically in their 20s and early 30s to 2 institutions in the UK, the Judge Business School, which is at Cambridge University, and the Sire Business School, which is in Oxford University. And both of those institutions, for example, are, just as you are doing here, training the next generation of entrepreneurs and so on. The role of the incubator, I think, is really key, not just through the practical support and the education that you provide, but also the network of investors, the peer group, and so on. And that's really crucial, I think, when you're an entrepreneur. You want to you want to learn from others, but you also want to seek out business opportunities and capital. So I think it's really important. I think this initiative that you're doing here as well is really valuable. And without it, frankly, I talk about the organized sector. Entrepreneurship in itself is becoming increasingly organized, which is a good thing for everyone who is here. So I think that's it on entrepreneurship. And you were asking the first, you were saying?
Why would students?
Yeah, they'll choose either entrepreneurship or go into a big corporate. It's, I have a 19-year-old son myself. He'll end up bouncing out of university in 2.5 years' time. I don't think there's a right or wrong answer. I think that many of my son's, my daughter's generations now will probably have 5 or 6 careers. I'm on my 4th career myself. They'll probably have more careers. I think that they will probably transition. Maybe they'll be an entrepreneur for a few years and then go off and work for a corporate, come back again, or the other way around. I think both have got great advantages. If you go and work for a big multinational, you have a brand on your CV and you learn how to navigate your way around a big organization, which actually can make you very entrepreneurial in spirit, as I found out. But also, if you go and do a startup, obviously it can be incredibly thrilling to have your own business. So I think it really depends on where you are in your career, what really lights your fire as a youngster, and what opportunities come across your path as you go along. Again, little old me, but many of my opportunities just happened to land in front of me, and I took them. And I think for youngsters these days, what I notice again as a parent is that there is a bewildering array of things that young people can do now. That's very positive in many ways, but also it's very confusing, I think, for young men and women perhaps who've come through university or in their 20s. There are literally so many options that you can do. One of the dangers is that you never end up taking any of the doors open to you because you're a little bit confused.
Pawan, any last question from you?
Job. I can relate it very well with the HCL ecosystem, let me tell you. It's a DNA of the corporate, actually. I can't quote many, but definitely HCL, where from Mr. Nadar, the DNA of the entrepreneurship is coming. And I myself have seen that 2-3 business coming up so large and big. The executive as an entrepreneur, picked up that. Class case is Vineet Nair, right? He picked up, like we said, business is nowhere in the country. And he said, hey, Shiv, I will do it, right? Let us do it together. He was an employee of the company. He got a, stock options, whatever we call it, right, in the sharing. And that business, it was a very large business in the group. So it depends the ecosystem in the corporate, within the corporate itself, right? Similarly, we started as a BPO as a new business. I was part of it for 6 years. We started with a scratch, zero revenue. And in 6 years' time, we were $250 million company, right, with a 25% EBITDA and all. And, 10 center, 3 continent and all. So it's I think, somewhere that how you, motivate or encourage the employees who have a DNA of that entrepreneurship. So as you're rightly saying, there's nothing right and wrong here, but it's a matter that what ecosystem and what environment you get it, and support and your risk-taking capability, etc. So yeah, I'll say, not a question, but just to what he said, I have seen myself in the group. Yeah.
So with that, I know that many of you do have questions. But I also know that Richard needs to reach somewhere. But Richard, we'll take a few more minutes to break from this and maybe allow 1 or 2 people to have a side conversation with you for a few minutes. But with that, thank you for joining us today. It was absolutely wonderful. We couldn't have a better person to come and talk to us, motivate our young team, which includes the Shiv Nadar University employees who lead the external phase, the incubation team, which is trying its best to support the young startups who have gathered here. Today, the incubators you've met have traveled from Chennai, Bangalore, Hyderabad, all over the country, spending 2 days at the campus in a bid to meet people like you, and I'm sure that they have gathered a lot from today's session. So on their behalf and on my team's behalf and the university, I'd like to thank you very much. Thanks so much.
Thank you. Thank you, Anuba. And I just wanted to say, Poana, how much I've enjoyed meeting you. We're all a peer group. I'm not sure if anyone's learnt anything from me whatsoever, but